The bond market story. Bonds, among the oldest financial instruments, continue to fund growth with trust and transparency. The story of bonds is millennia old, from clay tablets recording early loans in 3000 BC in ancient Mesopotamia to classical Greece and Roman kingdoms, and across continents and centuries, societies have relied on structured debt to build trade, infrastructure and institutions. India's journey mirrors this evolution, from colonial-era loans to post-independence government securities that built our modern economy. Over the past 2 decades, India's debt market has evolved, transforming from a bank-dominated system into a rapidly expanding, diversified marketplace. The value of corporate bonds outstanding have grown exponentially from about 17.5 trillion in FY15 to over 53 trillion in FY25, with FY25 seeing record issuances of nearly 9.9 lakh crore. At roughly 16% of India's GDP, our corporate bond market still has room to grow compared to developed economies, but the direction is clear and the momentum is real. Today, the investor base has broadened well beyond traditional institutions. Mutual funds, insurers, pension funds, NBFCs, and now a growing base of retail investors, all empowered by digital access. This increase in participation is accompanied by a broader range of issuers and instruments. Capital now flows across financial services, infrastructure, energy, manufacturing, and green finance, with bond types expanding to ESG-linked, social, and sustainability-linked debt aligned with global standards. Behind this rapid transformation stands India's regulators reshaping accessibility, liquidity, and protection in the bond market. That intent is now visible on the ground. Important measures in recent times include reduction in private bond face value to 10,000, UPI-based public debt applications enabled up to 5 lakh, boosted municipal bonds via platforms, launched electronic debt bidding platform for transparent price discovery, created centralized corporate bond cash flow database, strengthened tri-party repo for liquidity efficiency, and introduced liquidity window facility for early corporate bond exit. For issuers, the debt market is a thriving ecosystem offering potentially lower cost of capital, longer tenors, diversified funding, and access to a broad investor base. The numbers itself reflect the shift. Between FY22 and FY24, about 22 lakh crore was raised through corporate bonds, comparable to around 25 lakh crore through bank credit, signaling real depth and confidence. In truth, India's bond market is more than just a financing tool. It is the wheel of continuous growth and engine of national progress. For investors, especially those with a fixed income mindset, bonds offer predictability, stability, and meaningful diversification, turning savings into long-term security. This accessibility means as ticket sizes fall and digital access rises, more Indian households can move from a savings mindset to thoughtfully investing in the bond market, joining the nation's growth story. A deeper bond market channels domestic savings into roads, ports, power, healthcare, and digital infrastructure, reducing dependence on foreign capital and building resilience. And as India moves towards Viksit Bharat 2047, we are poised for the next decade of growth under the able leadership of SEBI. Bonds, एक सशक्त बंधन।